Welcome back. Let's talk markets. Well, the budget has clearly given a big thrust to capex, but the question is also on consumption. Now, here CLSA has an interesting view. They're saying the tax slab change is unlikely to lead to large consumption change. The government, remember, has introduced new tax slabs under the new tax regime. Their analysis suggests that taxpayers are unlikely to benefit by shifting from the old tax regime to the new tax regime, and hence they do not think the budget will lead to a potential increase in savings due to the tax changes, leading to an incremental consumption boost. To take this discussion forward and the others and everything that's happening in the markets, we're now joined by Taher Badshah of Invesco Mutual Fund. Taher, where do you stand? Do you see the budget giving a big push to consumption? Is that a space to bet on?
Well, not quite. I mean, this is probably one area which is not been fully addressed, and maybe there were certain expectations in certain parts of the market that this lever was somewhat waning since the last 6 months, and we've seen this lever work out very well in the post-COVID period for nearly about 4 to 6 quarters, and off late we have seen a little bit of the receding of this catalyst as far as growth is concerned. So I think there were certain expectations, and more particularly, I think the rural part of the consumption basket, which is now been a bit of a bit on a slow track for now, almost 1.5 years or more. So I think I would think that probably, at least from the budget's point of view, this is not being fully addressed. But we are happy about the fact that there's a continuation as far as the infrastructure and investment push is concerned. That is clearly the centerpiece of the budget.
Taher, hi. The whole analysis yesterday was that it is a very, very sort of pro-growth budget, thanks to the large capex figures that we've heard and the promise of being on the fiscal glide path. But for the market here and now, what changes? I mean, do you see any immediate impact on any specific sector which you will start taking, let's say, a fresh look at because of the announcements yesterday?
Well, not quite. I mean, I think we were kind of positioned in that direction where the budget has led us to. So in a way, we've from the point of view of the domestic sectors and the domestic economy, we were reasonably positive as far as the investment cycle is concerned, and it's good to see that has been well supported during this budget in this budget, and I think that just offers that level of continuity to our thought process in that regard. But otherwise, I don't really think much changes. I mean, we have been on this mode that we are probably going to see a little bit of a weaker 2023 compared to 2022, and there's not really nothing significantly wrong with it. I mean, it's a cyclical phenomenon. At the end of the day, we saw a very significant surge in post-COVID consumption and everything else, and that's probably going to go through its bit of cyclical pressure. So I think that's where we are. It doesn't really change significantly the needle for us in terms of our sector allocations or our portfolio configurations.
All right, got that. Taher, good morning. Thanks for joining us. This is Pavitra. I'll get back to the budget announcements in just a bit, but I have to ask you about, the entire Adani story that we've seen play out. Your initial reading on this, the FPO has been withdrawn, but how do you look at this, and do you think the bulk of the damage from a market standpoint is done?
Well, these are continuing risks. I mean, in the market, I mean, you typically have to deal with risks of this nature, and while we don't really have any exposure to the group at this stage, so I don't really think I'll be in a position to comment. But essentially, as far as any domino effects are concerned, I think it is there is a point of worry, but it is also we're taking comfort in the fact that the banks have significantly strengthened themselves in the course of the last 3-4 years, and in terms of disclosures too, it has been reasonably fine, and plus they are well provided in many ways. So I think the damage, if at all, will be a lot more contained this time around compared to the kind of episodes that we've had in the past.
Sorry, Taher, just one more question, since you did mention the banks and we have been talking about perhaps the limited exposure to the Adani group. Do you think that after a fact that these banks have corrected so much, these now look more attractive, and would you buy into banks now?
I think so. I mean, we some time back before this correction, I think the trade was becoming a little more consensus heavy as far as banking is concerned, and perhaps it was not fully taking cognizance of risk, not as much on the asset quality side, but perhaps on the side of margins. And I think this correction, therefore, at least takes away that part of the risk. It makes things a little more comfortable. Valuations have retreated to some extent, and maybe the market is a little more balanced now in terms of the view of the sector compared to having been very somewhat one-sided, I would say, in the last 6 months' time. So I think we'll have to keep differentiating between within the banking space and trying to line up our preferences. But I think some of this correction clearly will make entry opportunities available for some of our preferred banks.
Taher, thank you very much for joining in. That's the view coming in from Invesco Mutual Fund. Believes the collateral damage from the Adani saga is going to be far more contained for the market.